weekend. Ira Epstein of Linn Associates with your weekend edition of your agriculture wrap-up. And this wrap-up is going to be for Friday, and this is the 24th of April 2020. We're just getting on towards the 2:30 time zone. Stock market ending up on a positive note. I was guessing that was going to be the case because you've opened up Georgia. There'll be more states opening through the weekend and into next week. So the market's getting that euphoric feel. It stays that way unless we see cases pick up where they're doing this. That could pull the plug on everything. I don't expect it. I hope that people are smart. We'll see what happens. As for the news that hit today, the USDA cattle on feed report came out on Friday today at 2 p.m. The cattle on feed, 95%. They had estimated 95%. The prior month was 100%. The placements were down a little more than thought, 77% placed on feed. Estimated 80, the month before 92. And marketings were up 1% and about, 8% greater than they were last month. So what we've known is that ranchers, where they can, are putting their animals out in the pasture land. Part of the reason is some of the packing houses have closed down. You're not getting bids for those animals as the workers haven't been showing up. They're trying to get those back up and running now. And if people start feeling better, you will see that. Now, it's not just feeling better, it's being better because there have been COVID cases found. And if you've ever been in a packing house, you're shoulder to shoulder. It's like a trading pit. I mean, they are on lines cutting meat, and when you separate them, you've got to figure out ways to do it as management. What's going to happen? Production's going to definitely fall, but it's better than not getting any meat into the supply chain at all. So that's where we're at. We'll see how the markets want to respond to all this come Monday. Now remember, on this edition, what we do is we're going to look at one monthly chart, and then we're going to go to all weekly charts. We're looking for the bigger picture. So we look at a monthly chart of beans for the month, and we're one more week left, actually 4 business days. You're down 53 cents. It's a heck of a break. The market's coming down, and we are in planting season in the corn. Now, some areas can do beans, but it's a bit early. You know, you're really not doing them yet. We'll see what the market wants to do with that, but we're back into this area of the 832 zone on a monthly chart, and will the market be able to hold it is going to be very important. When we go to a weekly chart, the first thing that should be evident is the market keeps breaking into new lows. You see that? So we still have that down thrust going. On the weekly chart for the week, you didn't do bad. You're down 1/4 cent on the bean. So not bad. You had a probe to the downside. You didn't finish positive, but you didn't come down and do much damage in terms of ending the week lower. The swing line, and I'll come back to it so you can see it here, has that pattern of lower highs, lower lows. So it is bearish and stays that way unless you get over the 870 level on this particular formation. Where's the resistance? The combination of the 100-day average green, 885 3/4, and 883 1/2, the 18-week moving average of closes, and you had a bearish crossover. A bearish crossover is defined, and I'll come back this way so you can see it. There we go. My fault. I hit the wrong button. It's when the 18-week moving average of closes gets underneath and closes under the 100. That's a bearish situation in the market. Algorithms will pick up on it in many cases. The traders will pick up on it. There's certainly nothing bullish about that. When we look at where the market went down to and what it held, it again challenged the lower Bollinger Band. Now, if you'll notice, each time you've challenged that band recently, you've been thrown the other way. That doesn't mean you've turned the trend. While you've been thrown the other way, you haven't once made a higher high. You've made lower highs and kept coming down here with lower lows. So it's just the support zone on the lower number. In terms of the momentum, it is still pointing to the downside. It hasn't seen a reversal where the red is crossing over the blue, so you're getting that up shift in it. It's still staying and pointing to the down. Now, when I look at weekly momentum on slow stochastics, I don't look for overbought or oversold conditions. It's either pointing up, down, or sideways. I consider it still pointing down at this point. In the meal market, we had this phenomenal run up to 336, and in no time at all, 5 weeks straight down, by the way, without one higher week, you have fallen back to 287.70. So the market is, number one, not trending. Number two, it was unable to stay up for any length of time that meant anything over the upper Bollinger Band. Normally you get 2 weeks in a row where you get over it, and on the first challenge back under it, you find support. You didn't do it in this case. You just went into a vertical nosedive, much more violent than the move up, because on the move up, you went up, you paid attention to the upper resistance, fell back and paid attention to the 18-week average, and then moved out, which is still unusual to get over that number. And you can see how it's come down now. So I think they just wiped everybody out, to put it mildly to you. But I see resistance in this area, but not a trend. So we have a higher high, lower low. The oil is trending down. The oil has been trending down since the 35 level, and it continues to make lower highs, lower lows. It too pays attention to that lower Bollinger Band. You get under it, it moves back to the right of it. That's what it's supposed to do. Momentum is still down. You can see how it's still pointing down. Trend down, bias down, momentum down, and you watch here, you might get a bearish crossover in this, which would be another bearish factor for the market. In the corn market, we keep going down and trying to stay under the Bollinger Band. Now, we did it this week. Last week, the market finished at 322 under the number. That's 2 weeks in a row. The week before, it also closed under. That's 3 weeks in a row. Over here, the market closed under. That's 4 weeks in a row, 5, 6. This is highly, highly unusual, but very bearish. By the 5th week, you normally spin the other way. So it tells me that even on rallies, how I interpret that is the market's going to be a dead cat bounce. I could be wrong, of course, but it's telling a story as to how bearish the market is. It's not even paying attention to the Bollinger Band typical rule. That doesn't mean we won't move to the right-hand side. I fully expect it. I fully expect it trying to do it right away. But it's also telling me this market has some serious issues. In the wheat market, bearish, turned bearish today. Lower highs, lower lows, you kept that part down, momentum down, bias down. Now the target, if the market can continue to break, is 514 to 510 3/4. Resistance back up at 548, the 18-week average. And to break this pattern, you've got to take out 564.5. In the sugar market, continued bearishness. Now remember, ethanols, nobody's driving, so there's really not demand for it. Be Brazil, be it in America, you don't have the drivers out there. In the corn keeps feeding on itself bearish because you've lost that ethanol business and you don't have that much animals out there to feed. So it's weighing on itself. It's like the perfect storm for all this, and the sugar market getting annihilated in it. Momentum down, trend down. This is a market that was just 16 cents. It's down to 9.55. So it's lost a dramatic amount of its value. It's very hard to want to get short a market that's down this far because a normal reaction can kick you back up here. But the trend is certainly to the downside. There's nothing friendly on that chart. A chart this week that decided to let go on the downside. Let me show you. We've been fighting a battle in coffee at this 18-week average of closes. And you'd get down or up, you'd pull back and forth. This week, it lets go and goes back to visit that 100-week average where it's found support numerous times. If it can extend that, then the lower Bollinger Band at 96.47 comes in. What the market's also done on this particular break is it set itself up in a bearish formation. When it was doing that here, it was trying to set higher lows, higher highs, and that was support. Now it's got the opposite. Lower highs, lower lows, a bearish consideration, bias down since you're under the 18-week average, and momentum has turned with it. This market's now in the bears' ownership. I would look at the market to have resistance in this 113 area. Problem is the risk factor. Risk factor's back to 121.20. That's an awful lot of money to risk if you're wrong. So we'll have to see what the picture looks like. You've got to look at the daily chart, obviously. In the cotton market, there's word that China wants to start stockpiling cotton, U.S. cotton. You know, if they're going to continue with their phase one deal, they've got to buy meats, soybeans, and so on. So that was the word we're hearing out of the trade. The chart doesn't look like it, though. The chart still looks like lower highs, lower lows. Admittedly, from 48.58, it's had a very nice bounce, but it has done no damage, really, to the bear cause, or has it? Well, a little bit it did. If we take a look at the momentum here, you can see last week the momentum, you had the red under the blue, and you kept doing that. That was bearish momentum. You've turned it now in favor to the upside. Momentum often leads price, but is it being dragged higher because you've bounced this much or not? That's what I think is happening. So I don't think momentum is really saying, prices are going to jump with you. I think prices have jumped and it's pulled the momentum. I still see a lot of resistance here at the 18-week average of closes at 62.49, and I would assume if the market gets up there, the bears will greet it with some sell numbers. In the cattle market, you've got a report today that I don't think was overly bearish. It certainly wasn't super bullish. It didn't surprise us on the placement number. But you got down to the Bollinger Band on that report. I don't know. I think that what I said this morning in my subscriber video was, probably be a good position not to have going into the report, and I still feel that. You hit the Bollinger Band, as we see so often, that's a low point where the market tries to swing to the right-hand side. In the hog market, we're still stuck with an ugly chart pattern, one of a higher high, lower low, momentum that has turned. At least here I can say momentum is leading price to the upside. I wouldn't be surprised if you get back to the 18-week average. You did what I wanted it to do on the daily charts. It got up, lost its embedded reading, and ran back to the 18-day average. Hit it today after a nice run. So it's finally paying attention. In fact, I'm seeing that in a lot of markets. We seem to be beyond right now the COVID panic in the agriculture area. And the markets are trading more in the fundamentals than they are looking over their shoulder, and oil prices go to a negative $37. Yeah, that can impact sugar and it can impact corn, of course, but it's really not weighing on that many markets. Very interesting to keep your eye on. I keep talking to you about my morning subscriber video because I think it's so important. I put this out, I try to record about 5:40, 5:45 a.m. And what I try to do is help you first thing in the morning with what I'm seeing on the charts. The idea here are trade ideas based on chart action. Now, I will look at the fundamentals. You can see I can talk cattle on feed. I can talk hog numbers. Been around this 51 years, so I've done it a long time. And that's the idea. I'm telling you what I'm seeing in other parts of the world. If I'm seeing that they're getting African swine fever in more places in China, and they had a lot of it this week, I bring it up to you. We talk about that. Then we look at the charts. Now, the charts will be different than I do here. They're black. There's more studies on them, and I explain. I teach in each session. And I go through everything in this exact sequence. So let's assume you want to trade meats or grains or the soft commodities. You need not have to listen to this. You just grab a scroll bar on the bottom, pull it right where you want, and it's going to go. The whole video is about 20 minutes long. The sections, they're nothing like that, a couple of minutes each one. And I did that because it took time to figure out the format that so many of our ag traders wanted. And I think you'll find that works. Now, the other traders may not want the ag. They just want to go to those. So we do it in a certain sequence. I think you'll find it interesting. I throw out the best that I've got out there, try to show you what I'm seeing on charts, why I'm seeing it, where I'm looking for support, where I'm looking for resistance points, and where it all comes in. This is all described in detail on our website, and that's where you sign up for it. If you go to our website at www.iraepstein.com under the word research, it's there, as well as my Spider ETF videos for the stock traders and so on. So all you need to do is go there. It's very inexpensive. I think you'll find it worth your time and effort. And certainly in this time frame that most of us are still locked down, little entertainment. I say what I want when I want. I think you'll find me to be a little different. I'm Ira Epstein. You have a good day, and I will see you all come Monday.